The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of The Morgan Report for the week ending 7 February 2025. Well, this is going to be brief. Lots of news. There's no lack of that in the silver gold financial system. But I'm just going to start out on the Twitter page. It's at SilverGuru22 for those that don't know it. And there's a link to the blog right here. And, of course, the Twitter handle I just gave you. Further, the website's right here at themorganreport.com. We do put out a free service, and we give you updates, usually about 3 times a week or so, a couple at least. One of my latest interviews is right here, and that is with Financial Sense with Jim Poplava. Jim and I have had a long relationship. In fact, he will tell you that I was the one that brought the silver investing idea to him many years ago, more than 2 decades ago. And I gave him the silver story. He was very attentive. He listened, and he said, okay, great. But I could tell there's some skepticism in what I told him, which he should have. And he asked me, well, is there anything I can do to back up the numbers that you've given me or what you're telling me? And I said, yes, absolutely. There's a Wall Street outfit, gave him the name, and he had a document, FedEx, like overnight. He got it, he read it, and he called me back, I think, about a week later, and he said, this is better than you said. And I said, well, I try to stay a bit on the conservative side of things, and yeah, the story's pretty compelling. At that time, we were in a structural deficit like we are now. The structural deficit averaged about 100 million ounces a year. That went on for 15 years. And even through that structural deficit that took the above ground silver supply, which I mean commercial bars, from 2 billion ounces down to 500 million or half a billion, we still saw the price fairly steady through that whole time frame. But once we got through that time frame, we got a big move up a few years later, and we peaked at around $50 an ounce at the end of April 2011. So anyway, I suggest you go ahead and listen to that if you're so inclined. The big news now, of course, is the tariffs, which I go over in this. And it's actually gone 2 directions. The first direction was no one knew for sure if Trump administration would put tariffs on or not. And it's been determined that he did, or they did, on the 1st of February, and then they quickly took them off, with the exception of China, which is at a 10%, not a 25%. Regardless, it's sort of up in the air whether this was a tactic, it was part of the art of negotiation, art of the deal. It remains to be determined. Regardless of whether or not it is going to take place in the future, doesn't matter from the aspect that it caused a lot of silver and gold to be moved from the LBMA, the London market, into the New York market. And because of that, we have seen a big drainage of silver and gold out of London. Now, there's lots of conjecture around it, and I have to say, it's very difficult because I've seen, not this exact thing, but I've seen these things before. We had silver squeeze a few years ago, and we watched silver go up into the 30s, and then Rostrom Benham came out and said that they needed to tamp down the silver market. So sometimes we get our hopes up. I would say I do, and think, all right, this is it. There's such a demand that supply cannot meet that we're going to see something take place. A failure to deliver. Well, there is in a way because of the delays, but that kind of gets ignored. And so I don't know what to say other than everyone's keeping their eye on it. I'm kind of in the middle. I think, could it happen? Yes. Will it happen? At some point, it's almost inevitable. But is it this time or not? I have to remain neutral and say, I'm just not sure, but we're going to keep our eye on it. So probably enough said on the tariff part. The other part is once all that silver and gold left, what happened was there were delays in deliveries, I just mentioned. And because of that fact, people that ordinarily probably would have left their gold alone in London said, hey, wait a minute. If nation XYZ is not getting their gold in a timely manner, and we've had our gold with you for the last, make up a number, 40 years, 50 years. You know what? I think it's a good time to repatriate it. Hey, send it over. Send us our gold. And so we're having, I would say, a mini run on the gold market out of London. Whether it's going to continue, whether it's going to cause anything further than it's already caused, I don't know. If I had to guess, I'd probably say probably not. The gold community at that level is very tight-knit. It's a wink and a nod, if you follow my meaning. And if someone's in trouble, you might see a central bank that does another swap deal, posts the gold up, someone delivers it to cover with the promise that I'll get it back at some point and pay you back. So again, I'm over talking it. I'll leave it at that, but it's very interesting to watch. And again, it bears watching because the dynamics of it and the trend are strong. And that means it could go somewhere within the next month. The last thing, I guess, is that March is a delivery month for silver, and delivery months are always very strong. And I expect this one to be one of the strongest. And if that's the case, we'll just have to see. So let's see how the price works. And there's massive shorts, massive, which of course is opposite to, what would happen if there were a short squeeze. And some of these entities that are massively short and having trouble borrowing shares of the SLV to short, they might just have to put on their big boy pants and cover. And if that were to occur, you would see some pretty big spikes in the price of silver, at least intraday, if not continuing for who knows how long. A few days, a week, 2 weeks, who knows. All right, so enough on that. Another thing I put up that this is from Jan. I won't butcher his last name, known him for years, writes good material. Talked to him a few times, haven't in a long time, but he posted this, that China was allowing insurance funds to buy gold. This is an idea that one of the people that came to me and Rick Rule and a few others had a great idea about having gold as part of an life insurance policy. I really encouraged him to pursue that idea because I think it's a really good idea. But there's just more and more central bank buying and institutional buying and nation state buying and BRICS buying of gold. And it continues, and I think you're going to see that trend. What's interesting is, of course, that the retail market is pretty dead. Most retail investors, that's the yous and me's, the small population, are for the most part selling back, and that's for a variety of reasons. One, gold's at an all-time high in nominal terms. Secondly, they need the money. They might have gotten laid off, or bills are just getting harder to pay, or whatever reason. They saved in gold. It's up. They can trade it for fiat and pay whatever is necessary, or just cash out, thinking, it's almost at 3,000. It's close enough. I don't think it's going to go much above it for a while. We had about a 40% move already in this year, last year till present day, and I'm getting out. So lots to that. Bob Coleman talks about the silver ETF and that the borrowing fee ends at 11.5%. This is, as he says, completely off the charts. If you expand this, you can see the chart here. Look at where my cursor is. I mean, this is, as he says, unheard of. This is just nuts. But I want to remind people, as I said earlier in this weekly perspective, that I've kind of been here, done that. And, I have a long history of being in this market. And when Warren Buffett bought 130 million ounces of silver off the COMEX, they only delivered 90 million. 40 million was not delivered immediately, but the lease rates went up to like 17% and stayed there for quite some time until all the deliveries were made. So again, looking back at history, a lot of people don't know this, but go ahead and you can verify it, that we've seen these situations where it looked like, okay, this is it, they can't get out of it or whatever. And yet it seems like they always do. So again, just a bit of caution, but nonetheless, it is a tight market. Looks like it's going to get tighter, and how it unravels remains to be determined. So I skipped through these pretty quick. You could get these off other sites, but they're most of what I think has been pretty important on this. And I haven't captured every single thing, but here's one on the LBA liaison with the CME with the U.S. authorities on the gold premium. World's demand for gold, another record high for this year. Appetite remains strong. Another one from Bob Coleman showing you what it looks like on the drainage here on gold and silver. You can see how gold has come down. And silver has also been drained off quite a bit. And I'm going to end with this one, a post from James Anderson, and he's always worth listening to. Shows you from 1968, tells you why he chose that starting date, which I think is a good place to start it. Gold is in gold, silver is in silver. And you can see silver is really lagging gold at this point. And to me, that spells opportunity. The monetary aspect of silver really hasn't taken hold yet, but I think it will. Gold, if you just looked at that and you just blacked out, what it was, you just told me this is a stock or commodity, and I looked at that, I would be cautious at this level. Why? Because it's gone parabolic, and parabolics usually correct at some point. In fact, I should say always correct at some point. But at what point? Is it at 2,900, 3,000, 3,100? I don't know. It's pretty long leg up, and it's probably due for a correction. I mean, if this tariff thing gets blown off and it's like, oh, we're just joking, we're just negotiating, and there's some change in the political winds, which can happen at any time, the way things move so rapidly now, the market might interpret that as, oh, wow, we don't need to own gold as much now. The risk is off. We're going to, move back more into the equity market. And on this equity side, the XAU and the HUI have actually outperformed gold so far this year. So the mining shares are starting to perk up. It's only a month and a week into the new year, so it's really hard to make a long-term forecast on that. But nonetheless, that's the story. So I'm going to stop here. David Morgan of themorganreport.com with another weekly perspective.